Hi, I'm Greg Hunter. Welcome to USAWatchdog.com with one of my most popular guests, also one of the guests I have on more. He's a personal friend of mine, but I don't have him on just because he's a friend. I have him on because he's smart. He has a trader's mind, and he is the founder of TradersChoice.net. I'm talking about Greg Mannarino. Greg Mannarino, thanks for joining us today on USAWatchdog.com.
Great to be here, Greg. Thank you so much, really.
You know, we talk 2, 3, 4 times a week, and when Yellen was talking this past week, you just before actually, you said that the market is if they don't like what she's saying, it's going to flatline or drop. Actually, it did drop, and it didn't do very well last Friday either. But you said that it wasn't gonna do well because she's got to talk about the balance sheet and all that. And then you brought up this thing when she did talk. You called me and said, "Could you hear?" She was saying that they're not hitting their inflation numbers, something like this, and it's a bit of a mystery. It's a mystery, and I'm thinking 1,000 accountants, PhD level, probably economist, and there's a mystery with inflation. What is she talking about?
It's incredible. It's enough to make you want to scream. No one even bounces back and says, "What do you mean it's a mystery? You mean you don't understand, Miss Yellen, what is going on here?" Of course she understands what's going on. It's incredible. It's actually mind-blowing how she could sit there and lie like that. I mean, this was the grandest of lies as of late. I mean, in a series of them. But look, it's a very simple concept, and I believe that your listeners are smart enough to understand that the
But she knows.
Of course she knows.
She knows there's not a mystery. What is she really saying?
Like I said, of course she.
What is she not telling us?
She's lying with a straight face. It's a mystery to her why we're not having inflation. Look, the dollar peaked last December. It has been in a downward trajectory since that time. The Federal Reserve has made it very clear that they are going to do whatever it takes to create inflation now. Why are we not having inflation as of yet? Why have we not had massive inflation as of yet? It's a very, very basic concept. It's economics 101, and this is how Janet Yellen is responding. That's a mystery. Well, Ms. Yellen, let me educate you right here, because you're probably watching Greg Hunter, because I watch Greg Hunter. A lot of people love Greg Hunter. Here we go. It comes down to the money velocity, something I talk about all the time. In a booming economy, let's look at it from that perspective. If an economy is going off like gangbusters, cash is going to change hands rapidly. Cash is going to move through that economy very quickly. Today, here in the United States, we are at historic lows with regard to the rate at which cash is moving through our economy. So let's use a little logic here. If in a booming economy, cash moves rapidly through an economy, what would be the converse of that? Well, in an economy that's going nowhere, which she is well aware of, we have no money velocity. So here's the issue. At its core, Janet Yellen can sit there and print X amount of dollars out of thin air into oblivion. She can print them out of thin air, whatever she wants to do. Without the cash moving, she cannot create inflation. That's the issue. However, here's the thing.
Oh, wait. So she knows. So instead of her saying something like, we printed all this money and it's not working and the economy's dead, she says it's a mystery. Is that what you're telling me?
Of course, because look, they failed. The Fed always gets it wrong, and I've been yelling about this for the longest time. Here's another case where the Fed always gets it wrong. All they have done here by unprecedented stimulus package and quantitative easing, upside down, backwards and sideways, using dark pools and whatever they need to do to keep everything propped up is inflate the debt, inflate a new housing bubble, inflate the stock market artificially. So nothing is real. We're in a fake environment. It's an incredible thing. And she cannot come out and say this. Because look, the narrative from our politicians, from the mainstream financial channels, the mainstream media is our economy is doing really good. Meanwhile, the Fed couldn't even raise the federal funds rate 1/4 of 1% this past Wednesday. They left rates unchanged, talking about the balance sheet down the line here. Maybe next month they're going to stop reinvesting into the long end of the curve, which we'll talk about. But the fact of the matter is, it's no mystery, and you got to choke and laugh or vomit or all of the above when you hear her say something like that, and no one checks her on it. It's an absolute lie. And it's an incredible lie, and no one bats an eye. They just don't even bat an eyeball.
She knows the economy is flatlining. If there's no money velocity, you've told me this before, that means that the economy is dead in the water. You said that to me.
It's dead in the water, and just look, it's economics 101. That's why she can't create inflation. It's no mystery. The cash isn't moving. If the cash is not moving because the economy is going nowhere. And look, how she can perpetuate the lie because she's managed to inflate the stock market. The average person who can barely walk and chew gum at the same time, I'm sorry to sound like that, but it's really the truth, looks at the Dow Jones Industrial Average, and that's all they look at, and they say, oh, the stock market's going up, so that means our economy is doing well. It's an incredible thing. It really, really is. But it's just not the truth. But this is how they can twist people's minds. By keeping the market elevated, it's an illusion. The illusion becomes real to the uninformed, and they say, hey, everything is just great. So they let her get away with something like, oh, it's a mystery. Are you kidding me? It's really just too much.
She knows the economy is flatlining. She knows it. She has to know it. But you can't come out and say, yeah, none of the stuff we did worked for the common guy.
No, because, if our economy was actually doing well, like we're all being fist-fed, she would have been able to raise the federal funds rate 1/4%, which she couldn't even do that, okay? So,
well, she can't do that if she's going to unload this balance sheet, which is the next thing I want to move on to. She can't raise rates in reality and then start dumping all this debt. I mean, that's the same as raising rates, is it not? I mean, isn't them getting rid of all this junk on their balance sheet that they did to float this this bubble? Isn't that something that is going to cause more debt dumped onto the market? It means more supply of debt, which means they must be paying higher interest rates, right?
Let me start off with saying this. My record with predicting what the Fed will do is second to none. Anywhere you want to look. I have been wrong one time and one time only in all of the years that the Fed has been talking about raising rates and what they were going to do. One time. Again, my record is stellar. I know what the Fed is thinking. I really can get into their head just by looking at the dynamics of the market and where cash is moving. This is what I do. I do this 24/7. I dream about this stuff. So here's the issue with what the Fed is attempting to do or saying they're going to do. Number one, they never do what they say they're going to do. We were supposed to get, 3 rate hikes this year? 4 maybe? We're maybe going to get 1 at the end of the year. They're talking about more rate hikes next year. Again, this is an illusion that what they're doing is working, an illusion that they have to make real because the market is dependent on it's on the Federal Reserve seeming like they know what they're doing, which they never do. They're always wrong. I think the Fed is becoming irrelevant, and we'll talk about that too. But with regard to the Federal Reserve's balance sheet, okay, so they want to normalize their abnormal balance sheet. This is their words, not mine. Their balance sheet is abnormal, so they have to normalize it. This is what they're saying. So what she's going to do to dip her toe into the water here is stop reinvesting into the long end of the curve. In other words, when they mature, she's not going to take that money and buy. Well, actually, hold on a second. Let me rephrase that. She's not going to buy as much because the Federal Reserve is still in there buying bonds. They have to do this to keep rates at a particular rate, a particular yield.
Low. Keep them low. They got to keep buying the
exactly. Debt. If the Fed were not buying bond yields, buying bonds, the yields would be, well, no one even knows what the actual rate, what would be the fair value for debt. No one knows because the Fed is in there buying everything. Quantitative easing has never stopped. The Fed has no magical power. They can't just say something and it happens. They have to get into the market and make it happen. So what Janet Yellen is talking about doing is starting incrementally in not reinvesting into the long end of the curve, hoping that she's going to normalize the yield curve, which is now kind of flat. She wants the yield curve to do this. Now, again, what people need to understand is there is no models for where we are going. This is like literally like Star Trek, where no man or woman has gone before. We've never been here. This is uncharted territory. It's all a theory as to how this will unfold. And because of the fact that we know the Fed never gets it right, there's a high potential here for them to get this wrong. Now, people like Alan Greenspan now, not just Greg Mannarino, and maybe some other people are understanding that the debt is in a bubble. He said this, he said that. Most people I think are aware. And there's a massive potential for a rapid sell-off here in the bond market.
And I want to get, and her selling this debt, her trying to clean up this balance sheet is the same as raising interest rates. And if interest rates start ratcheting up, people are going to take their 1.5% treasury or their 1.8% treasury or their 2.5% 30-year bond, and they're going to sell. If they see those rates climbing, they're going to sell. And that could collapse the bond market. Am I wrong?
Well, look, all we need to do is look back like on like an ancient philosophy and understand cause and effect here. It's that simple. If the Federal Reserve is successful and we get a slowly normalizing yield curve, what is that going to do? What will be the effect of that? Okay, it's going to push up mortgage rates, which will put pressure on housing. See, there's a lot of factors here that people aren't thinking about. They're not thinking about how it's going to potentially could affect the dollar. How is it going to affect people's mentality with regard to the wealth effect that has been created by the Federal Reserve, causing distortions in the market and inflating a housing bubble. If housing starts to come down, and I really believe we're at the top of that bubble here, housing has come down actually in certain parts of the country. We just found that the existing homes sales have fallen now 4 out of the last 5 months. So people got to start looking for things, and the signs are all over the place that we are at the top of a bubble here with regard to housing, and we're going to run into a big issue. But again, if Yellen is successful and that yield curve starts to normalize, because right now it's flat, it would put pressure on housing. That cash is going to come out of housing. They'll lose the wealth effect. You can get a sell-off in bonds, sell-off in the stock market. I mean, this can perpetuate into something very, very ugly, which is going to do one way or the other. Also, what's the effect of the dollar here to multinational companies? If Janet Yellen, again, is successful, the cost of money or the cost of cash will rise. So what does that mean? That means the dollar, theoretically, should get stronger. How will that affect? What's the cause and effect here? Very simple. Multinational companies, well, their earnings are going to suffer. That'll put more pressure on the stock market. So she's stuck in a really bad spot, Yellen here. It's not just a matter of what is the yield curve going to do or what is the effect of selling assets off of the Fed's balance sheet, some of which are mortgage-backed securities. And that's a whole other ball of wax that we're not even talking about just yet. We're just talking about bonds. But again, there's a lot in play here. Now, let me just move on real quick to the mortgage-backed securities that they have on their balance sheet. The Fed bought all these assets off of the banks when they were known as toxic assets. They've reinflated a housing bubble. So those mortgage-backed securities are actually worth something right now. If the Fed decides to start unloading these things, what does anybody believe? I mean, just put this and this together, and you can see that again will put pressure on housing. I'll tell you something else.
Because interest rates would go up. Selling the debt. The bottom line is selling off this big ball of junk they got. They could sit on it and it go back to being toxic, or they could try to sell it off while it's high. Either way, either they get stuck and insolvent, or when they start selling their debt, they raise interest rates. I mean, that's the same as raising interest rates, is it not?
It is, but the Fed isn't actually selling their debt. The Fed is just not reinvesting in the long end of the curve. It's not like, because no one's going to buy it. No one's going to buy any of this. So and they know that. So the Fed is just going to not be reinvesting as much, okay, because they still have to do this. You're going to start off really small. Really, really small, and see how the market reacts to this. Again, this is uncharted territory.
But that's still going to put pressure on interest rates. If
of
they
course,
don't buy all the debt.
Well, interest rates are going to go up, and then we're going to get the hermetic principle of cause and effect. It's a very, very simple concept. It goes back thousands of years. It's a simple concept to understand. But the other thing, does anybody here, and I would love to read the comments, find it kind of unusual that the Fed is choosing right now to normalize their balance sheet, that the Fed is talking about right now possibly getting rid of those mortgage-backed securities right now at the top of a housing bubble? They know it's a bubble. So, and they've reinflated that bubble on purpose, which is a criminal act, because all those people who lost those houses should be made whole, in my opinion. But, we won't even go there. But this is a fact. So we know the Fed realizes there's a bubble in housing. That's why they're choosing now to normalize the balance sheet. That's why they're choosing now to start dumping those mortgage-backed securities, which are now worth something. I'll tell you something else that people don't think about. Hedge funds. Hedge funds bought housing across the board. They bought all the real estate at the bottom. Now, housing has gone up as part of this bubble. What does anyone think is going to happen now if the Fed starts unloading their balance sheet of mortgage-backed securities and they start seeing some pressure on housing because interest rates are rising? What are the hedge funds going to do? They're going to start selling that property. So, look, if you bought a house today or tomorrow or yesterday, I feel bad for you because you're way overpaid for your home. But I know you don't want to hear that. But this is the truth. No one wants to see what's right in front of their face. And the reality of what we have here, Greg, is unbelievable. It's out of control. The debt is just truly a monster. That can never stop. I know you have a beautiful chart that you might.
Yeah, I wanted to bring that up. You sent this to me, and boy, I just said, give me one of your charts. And this is your proverbial hockey stick. And just so people know, this is the federal debt. This is 20 trillion, but it's not that it's 20 trillion because that's a big deal. It's how it happened. I mean, if you look here on this chart, you go back to, this is 1940. This is World War II. This is the Korean War. This is Vietnam. And then we get on to the petrodollar and doing. And right here is where Obama took office. And it's not only his fault. It's the Democrats and Republicans. And then just from the time he took office in 2009, we doubled the debt. And just it's parabolic. It's gone. Talk about this.
Yeah. Well, number one, it's actually. It's not that it's anyone's fault here. It's the nature of the beast. That chart you have in front of you can never stop. What I want people to understand, and people are going to hear me say this, and they're not going to understand it, which is very sad. But the system that we have is debt-based, which means that chart in front of you has to continue to rise. It can never stop. We can never pay off the debt. If we try to do this, the system implodes. The system is dependent on debt being borrowed into existence in perpetuity in greater and greater amounts. That's why the debt has doubled under Obama. It will double under Trump as well, until the system hits a moment of maximum saturation. When we admit, and I've been using that word for years now, when we cannot borrow anymore, that's when the system implodes. Now, the scary thing with that hockey stick that you got there, and I urge people to do a little research about this, the global population has paralleled with that hockey stick. So what does that mean? If the debt were to correct, and it is going to at one point, what do people think is going to happen to the human population? We're going to have, unfortunately, a biblical event. I wrote articles about this, human debt and the human bubble. They've risen in parallel. So there is no way to stop this. People think that their lives are going to go on in a normal way if the debt bubble bursts. People think that things are not going to change dramatically. Well, you are in for a wake-up call. Look around the world. Look at South America. People eating animals in the street, cats and dogs, just to survive. This is what's going to happen here. Unfortunately,
look at Puerto Rico. Don't you find it strange the year they default on $74 billion? I mean, just so people understand, North Carolina has 10 million people. We have, less than $5 billion in debt, okay? Puerto Rico has 3.5 million people, and they just defaulted on $74 74 billion. Corrupt the lead. It's not the people of Puerto Rico. They're good people. Their leaders sold them out and screwed them and defrauded them. And now, who is going to loan them money after they defaulted on 74 billion? Oh yeah, they have a 49 billion in pension debt down there with a population of 3.5 billion. Who is going to loan them money? They're out of power's out. Going to be out for months. I mean, that's the canary. That's your little ecosystem. That's going to be Mad Max Island down there, isn't it?
The whole system is fraudulent. The debt-based system is fraudulent. And again, it's a Ponzi scheme. That's what it is. We are existing in the biggest Ponzi scheme the world has ever seen, being run by world central banks whose product is debt. People need to understand this as well. World central banks have one product, and it's debt. That is it. They issue nothing else but debt. They do not create wealth. They create debtors. That's all they do. That's why the United States is the largest debtor nation in the history of the world. Why our population here, why most of the people that are watching this, unfortunately, have a negative net worth. If you were to minus out whatever you owe, your mortgage, your car payments, or whatever it is, and look at what you have in the bank, I guarantee you 9 out of 10 people watching this have a negative net worth. Why do they have a negative? It's probably more than 9 out of 10. But the fact is, that's the system. It creates debt slaves.
I understand that, but Puerto Rico is not alone. Puerto Rico is already
doomed, Greg. Look,
Illinois.
They're all going to be Puerto Rico. Look at all these South America. This is it. We're starting to see the situation unfold here. Like I said, it's a point of maximum saturation. It's not going to hit everywhere at the same time. It's going to hit, and it's happening right before our eyes. You know, we hear about South America all the time, but it's going to hit right here to our shores as well. And what is the end result, Greg? You can see it unfolding. It's war. They're going to bring us to war. This is what they do over and over and over again. It will never stop. They're going to sacrifice everybody. If you're a millennial out here or younger, you're in a lot of trouble. I can promise you that, because more than likely a lot of you in this next war are not going to survive, and you're going to be forced into this because this is the nature of it all. I mean, this is how it works.
Illinois is they're 16 now, a record 16 billion that they owe people for doing work. This isn't what they owe for pensions or for their bonds. I mean, pensions $250 billion. They're $130 billion of that is underfunded. They have another $130 billion in bonds. I mean, they're bankrupt. They're junk. They can't even sell lottery tickets in Illinois. Ohio just missed a debt payment of $1 billion. They're in the hole $1 billion. That's John Kasich, doing a fine job as governor there. Also, we have Pennsylvania. Pennsylvania just missed a debt payment of $1 billion. Ohio has got another little Ponzi scheme with their pensions, $20 billion underfunded in Ohio, where John Kasich is. And Pennsylvania's one just missed it too. But there's just 3 states right there. I know California's in trouble. Texas has big debt. New York has big debt. There are many states with a lot of debt, and they cannot print money. They cannot print money.
Greg, look. What's the bottom line here? The bottom line is that nobody watching your show or following my work should be surprised at any of this. I have been screaming about this for the better part of a decade. I have been telling people specifically that this is the situation that is going to unfold. I've been warning about the debt bubble. I've done everything that I possibly can to try to set people up to make them understand where we're going. None of this is a surprise to me. I do know it's going to get much, much worse. Once we hit that moment here where we cannot borrow anymore,
right now the states are already hitting that moment. They're not going to be borrowing money for their pensions. Puerto Rico's not borrowing money. Illinois not borrowing money. Ohio likely not borrowing money. Pennsylvania not. They're not going. Who's going to loan them money? And if they do, they're going to get 10%. And we want that highway, or we want that 5,000 acres over there, or we want that beach or shoreline, or those mountains, or that natural resource. I mean,
this is how they're going to kill the currency. The Fed is going to be forced to print more cash out of thin air, loan them money, whatever it's going to be, and then the currency dissolves. This is the same. We've seen this before. It's going to happen when, I have no idea when that actual moment is going to be, but once it happens, whether it's tomorrow or next week, and it's probably not too far off, again, in the grand scheme of things, more than likely everyone here that's watching this is going to experience it in their lifetime, where we're going to face a moment here of an absolute complete meltdown of the system, because the debt-based economic model is fraudulent. It's a Ponzi scheme.
And everybody's gonna ask the federal government to do something.
Of
We need
course
our
they
pensions
are.
paid.
Of course they are. And they're going to kill the currency. And we're going to get hyperinflation, because that's it, when the cash is going to start to move. Again, the money velocity comes into play here. And the sell-off in the bond market, which is going to happen, according to Alan Greenspan, and me, I think Alan Greenspan watches me because he sounds like Greg Mannarino now. But the truth of the matter is, once people realize the debt is no good, which includes the currency is a unit of debt. Again, it's a debt-based model. Once we start getting massive sell-offs here in the bond market, it's going to happen there first, because it's the biggest market of them all, and everything is inflated and twisted because of that. Then cash starts to move.
Who would buy sovereign debt, state debt from
Nobody's going to buy.
Who would buy debt from Ohio? They just missed $1 billion in pay. Excuse me, I keep saying Ohio. Pennsylvania. Who's going to buy a debt when they have all these pensioners with $20 billion in the hole? And what's the governor going to do? Buy votes and say, yes, sorry, bond holders, but we got to pay our pensioners. Nobody's going to loan you money.
No, the cash isn't even, Greg, the cash isn't there. The cash isn't even there. It's all digital anyway.
Yeah, we have one of the lowest saving rates on record. I mean, here the Fed is selling this big ball of junk. I think the whole savings rates for the United States, with that, what do we have, a $15 trillion economy? The savings rate, according to one article I read, was $355 billion. And we have a $16 trillion economy. 14, whatever.
Well,
that's all the savings, period. All of the savings, that's it. That's all. Thank you, Federal Reserve, for cutting interest rates to zero. Thank you, Federal Reserve.
Of course. And how about the fact, and this is a fact, I urge people to go check it. Go on the Federal Reserve's own website right now, today after this video. Go on it right now, open another window. There exists 1.4 trillion of actual printed dollars on Earth. 1.4 trillion. The rest of it exists in digital form. It doesn't. It's not real.
Do you think we get out of this with this? Do you think Yellen can exit? I don't think she wants another term as Fed head. I mean, when she's saying it's that inflation's a mystery, and she knows that's a lie. She knows that economy's flatlining. Mm-hmm. I mean, she's in trouble, right?
The trouble.
I mean, are we going to ultimately? Here's what somebody asked me, and I want to ask you this. And the person wrote me and said, you're going to have Mannarino on because I promote you ahead of time. And he says, ask him about a debt jubilee. And everybody thinks a debt jubilee is, oh, wow, we could just stop paying our bills and wash away all that debt, and we can start all over and everything's cool. Is that, are we going to have a debt jubilee in some form?
Okay.
And what is that going to look like?
Okay. So, a debt jubilee. I want people to understand what they're talking. When I hear anyone say that, when I hear someone talk about how the debt can be forgiven or whatever it is, they have to understand what that means for them. That means that their whatever bills that they have, whatever they think they may have, it goes to zero. The dollar is backed by nothing. Okay, the dollar is a unit of debt. If we forgive the debt, that you might as well take, I don't know, you got $10,000 in the bank and light it on fire. You have a zero net worth. You cannot acquire assets. You will not be able to buy a loaf of bread, a gallon of gas, support your family. You're done. Period. That's it. Again, the system is debt dependent. So
because we basically give the Federal Reserve treasury bonds, and then they print their Federal Reserve notes. And if those treasury bonds are rendered no good, or interest rates spike up and they're worth a lot less than what people are holding them for, then basically the Federal Reserve notes are no good. Isn't that funny? $0.25 or $0.50 or a Sacagawea dollar is a treasury instrument. It's not a note. But you'd have to have a lot of change to make it in life. But what does it look like if we have this jubilee?
Well, think about it. If people can, if there's no cash to be had, if there's no means of transacting using the old system now, because the debt jubilee, again, would mean the dollars are now worthless. You have no means to transact the way you used to. You go back to a barter system. Now you're going to be trading things or whatever it might be.
Well, they transition to a new currency, like Jim Rickard says, SDR.
If they transfer to a new currency, it will be debt based. Why will it be debt based? Because the central banks run the world through their debt-based system. We will never have a wealth-based system again. It's gone. Once we gave up power to world central banks, which are not part of the government, and we gave basically our livelihood to these institutions, that's it. They control us. We're done. So people can, whatever they want to do, they want to introduce a new system. It's not going to be to our benefit. It's going to be to their benefit. We are nothing on those squash us like bugs. And if people think that they're not going to be paid whatever they're owed, well, I can promise you that when this debt-based system implodes and you start to see a mass, almost extinction level event occur, well, people are going to be begging for anything at that point, because that's really what this is about. It's about control, and they're never going to give up control. So forget about a wealth-based system. Forget about a debt jubilee. Get used to what you have here now and start planning ahead, because this thing here is a monster that is going to be unleashed on every single person who lives in every corner of this earth at one particular time.
Well, which will be the jubilee, which will be the washout of debt. I mean, that's what you're talking about. And
Eventually,
if we have a washout of debt, that system goes by.
The system's going to implode. It can't go on. But the new system, believe me, they already know about this. It's already probably put together in some place. It's not going to be in our favor. We've given up control until people go after the central bankers with pitchforks, and we decide to take the system back to ourselves, which will never happen, because the people have been dumbed down on a global scale. They cannot walk and chew gum at the same time. They barely can probably understand half the concepts that we talked about here. This is the general public, not the people watching your show who understand this. This is a natural selection that we are experiencing right now. It's not just about the currency. It's not just about the situation that we're in. People that are mindful enough and have enough intellect to understand what is going on here are being chosen. They're being chosen for a reason, because they're the only ones here who maybe will have a chance of getting through this when there's a new system. And we need to take it back one way or the other. And I think before that would happen, we would see again a near extinction level event occur.
Well, look at Puerto Rico. I mean, there's your little microcosm of what happens when you're bankrupt. Even if somebody could loan you money and would loan you money, the terms would be onerous. They would want shorelines, hospitals, they'd want roads, they'd want public lands ahead of time. You're going to deed them over to us. And then you'd be building your brand new hotel while people are living in tents and covering themselves with sheets and mud and digging through the trash, and you'd be building yourself some new stuff down there. I mean, would that be a stable place to be living? You'd have a tiny fraction of the population that had anything, and everybody else would be in bread lines and food lines and living in tents. I mean, they're not going to have power down there for months. And I'm not making fun of the people of Puerto Rico. They're good people. Their leaders absolutely defrauded and screwed them. I mean, before they defaulted on this debt at the end of last year, they paid themselves, all the government people, something like more than $100 million in bonuses for fraud and basically incompetence. And so, I mean, that to me looks like Puerto Rico's going to turn into Mad Maxville, is it not?
Greg,
I mean, that's what it looks like when you run out of other people's money, Puerto Rico, and you're bankrupt and you can't borrow any more money.
The central banks are going to take everything. Whatever property you think you have, they're going to take the land. You will be a serf, period, at one particular time here, serving your masters like you do already. Although the perspective is going to change. I think we're going to be experiencing a new Middle Age period where we go back to a feudal system where you serve the land and you serve your master and you serve whatever ruling class is out there under whatever banner of religion they want you to follow at that particular time. That's the way it's going to be. You want to look at the future? Look at the past. It's that simple. And I think if you really want to see what the future looks like, look at the Middle Ages. I think that's where we're going. I really do.
Gregory Mannarino, traderschoice.net. Thanks for sharing your views on the debt situation and the mystery of inflation by the the Federal Reserve. Gregory Mannarino, traderschoice.net. Your entire site is free. You can find out what Gregory's thinking, see his videos. You can pick up free trades if you like to do that. If you're good enough to do that, I'm not. I can't trade. But I sure like having your brain on display here at USA Watchdog. Greg Mannarino, traderschoice.net. Thanks for joining us today on USAWatchdog.com.
Thanks, Greg.